Good morning. Today's lead story in the world of finance centers on a pivotal announcement from the Federal Reserve that has set global markets on a new trajectory. As we move into the third week of January 2026, Fed Chair Jerome Powell, during a surprise press conference at the Brookings Institution, hinted that the long period of restrictive monetary policy is drawing to a definitive close. This marks a significant departure from the higher for longer rhetoric that dominated 2025. The shift is primarily driven by fresh data showing that core inflation has finally stabilized at the 2,1% mark, effectively meeting the central bank's long-term target without triggering the recession many had feared. The impact on Wall Street was instantaneous. The Dow Jones Industrial Average surged by over 400 points within the first hour of trading, while the Nasdaq reached an all-time high, fueled by a resurgence in high-growth tech stocks. Investors are particularly optimistic about the soft landing scenario, which now appears to be a reality. Furthermore, the Fed's report highlighted the role of increased labor productivity, attributed to the widespread adoption of autonomous systems and advanced AI across the manufacturing and service sectors. This productivity boom has allowed for wage growth without the corresponding inflationary pressure that typically accompanies a tight labor market. However, the Federal Reserve remains watchful of the commercial real estate market, which continues to undergo a structural transformation as hybrid work models become the permanent standard in 2026. While the outlook is positive, Powell emphasized that the Fed would remain data-dependent, ready to adjust if geopolitical volatility affects global energy supplies. Traders are now pricing in at least 3 rate cuts before the end of the second quarter, marking a new era for capital investment and consumer borrowing.